Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsakti, and government Gsec yields were steady, the rupee slightly up, and the Sensex also higher as markets await the outcome of the RBI policy review that is scheduled for tomorrow. And what are the market expecting in the RBI policy? There is a slight question mark on the market whether RBI will start to guide for rate hikes going forward, largely because the economy seems to be on a good path and there is a lot of inflation expectations are rising, with crude oil prices rising very sharply in the global markets. And also there are prospects of the Fed also looking to raise interest rates sooner than later. In other global central bank policies, we saw Brazil being the first runner in rate hikes. They were hiking rates many times. New Zealand came out with a rate hike this week, which is the first in in a few years. And this indicates that many central banks are seeing inflation expectations rise. And India too is not immune to global inflation trends. And given that we are a faster growing economy, so RBI would need it to keep its guard against inflation and may sound out that they will start to normalize policies soon. And the impact it could have is bond yields could rise. But having said that, it's a good thing for the markets because then the markets can have a better understanding of where the yields are, rather than keep worrying about when RBI will start to hike rates. In other markets, US Treasury yields stayed above 1.5%, though it wasn't rising very sharply upwards from there. And in corporate bond market, state government guaranteed bonds is seeing good volumes. Many investors are favoring these bonds because they offer higher yields, but they come with higher risk as all the state government entities solely depend on state government finances for servicing bondholders because all of them are loss making and continue to make deep losses. Thank you for listening in. Do not forget to log in to Quick Invest, our digital retail bond platform that gives you a variety of bonds to invest depending on your needs. You could have on your savings needs. We enable savings through bonds. And if you are saving for retirement, to meet a financial goal, to preserve wealth that has been created through higher equity prices, etc., all bonds are available for you. And obviously bonds where if you're feeling your fixed deposit rates are too low, you also have bonds for that. And we provide the information, we provide the price transparency, and we provide the ease of buying the bond as well as looking to offer liquidity on the bonds. Thank you for listening in. Do not forget to subscribe to our YouTube channel if you're not done so already. And yes, once again, thank you for listening in.